Hi guys, and welcome to this short hindsight analysis of EURUSD. If you're in the mentorship group, you know that last night I gave you guys an assignment to take a look at EURUSD daily close, right? So if we look at last night's close, it came in up here, right? And I specifically said put your eyes on that down candle, right? This down candle here is the one I wanted you guys to focus on. So now, with that being said, why specifically did I mention that focus on the down candle of Tuesday's close, or Tuesday's body's candle, right? The body of that candle, right? Because it has a significance which I wanted you guys to see so that you can learn from it. Now, when we look at Tuesday's price action, which is our down candle, right? During a strong uptrend, as you all know that Euro is quite strong at the moment. So ideally you need to be hunting for long trades, and those long trades, where do you take them from? That's where that candle becomes crucial, right? So now I'm going to mark out Tuesday's high and Tuesday's low, right? So our high is coming in at 1773, right? Our high is coming in at 1773. Let me just mark that out. So we got 1773. That's our Tuesday's high on a daily time frame. Remember, we are on a daily time frame. So this is what I wanted you guys to do in the assignment. There is guys that submitted their analysis and they did very well. So that's Tuesday's high, and Tuesday's low is coming in at 1698. Tuesday's low is coming in at 1698. So this is gonna be a detailed review, guys, hindsight review of the assignment, so that you learn and understand how to break down the structure. 1698.1, that's Tuesday's low. 1698.1, 1698.1. So this is Tuesday's low. Now, once I have done that, right, once I have marked those levels, obviously remember you need to consider the what? The body, the candle's body, right? So if we are to do a rough measurement of the candle's body, you can see that our equilibrium is coming in at 1732, right? That's where the equilibrium is coming in at. So I'm gonna put a horizontal line. I'm just gonna make it a solid dotted. Let me just make it a solid horizontal line. It's coming in at 1732. So this becomes our main threshold of the down candle. Now the down candle resembles our bullish order block. Remember, the institutions, this is where they were buying during this down move. Retailers were selling, thinking the market is now going to the downside inside that range. So now that we have highlighted the levels that we're going to be looking at, where is our trading range? This is our trading range from the high to the low of Tuesday's price action. That's the range that you as a trader would have been looking out for if you're gonna be jumping in on this upward move, right? So now that you have marked that out on your daily time frame, remember you're doing this in hindsight, so it's a case of learning. I'm gonna drop down to a H4 chart. Now on the H4 time frame, you can now see the price action panning out. Right, let me get rid of the rectangle, the gray shaded area, right, so that we have a clean chart that we have to focus on. So now on H4 you can see Tuesday's high and Tuesday's low, right? For instance, if I'm to place my fibs from Tuesday's high, right, to Tuesday's low, so the equilibrium is at 1735. Okay, so 1732 is a much better representation. You can see how price today now, remember we had an up close candle on Wednesday, right? We are focusing on Tuesday's price action, but on Wednesday we had an up close, right? Price showed us that it's willing to trade to the upside, right? Now when you look on Thursday's price action, we had 3 down candles during Asian and London session, right? We had 3 down candles, but prior to New York or halfway into the London session, we had price trading into our equilibrium, our mean threshold of the bullish order block. That's significant, guys. Remember, we are anticipating long trades on EURUSD. That is way too significant, right? Because if you are a proper institutional trader, if you know what you're doing, this would have been a good entry to the upside, right? With your stop loss below Tuesday's low, because you don't expect price to what? To drop down again to that price point. If it does drop down again, then probably that setup is now violated. It's not gonna be what? Valid. So now I'm gonna go to a H1 so that we can clearly see the price action, and I'm gonna put my daily vertical lines, right? So you can see we've got Tuesday here, and then we've got Wednesday here, and then we've got Thursday here, right? So Thursday 12 o'clock mid European session, right, we had a drop into our mean threshold of the Tuesday's daily candle, which is our bullish order block, right? In this candle here, which dropped into the mean threshold of the bullish order block, that's where your entry would have been to the upside. You see, you can see already Wednesday did offer the same setup, right? Wednesday offered the same setup and like 70 pips were on offer, right? But now, personally, this second touch of the main threshold of the order block would have been my ideal entry to the upside in this hourly bullish candle, the one that tested the main threshold of the bullish order block. That's where I would drop down to a smaller time frame, right? The 15-minute time frame. You can see how price dropped. London open, price dropped into the bullish order block. Mid London session, we had a rally to the upside. You see, so we had a swing point formed. We've got our swing low into the mean threshold of the bullish order block, and then we've got the high. So now New York session now would have been my entry, because there would have been more liquidity. I'm anticipating price to react. So once I have seen that there was this drop, right, so now I'm gonna grab my fib 2, right? I'm gonna grab my fib 2. I've seen price drop into the mean threshold of the bullish order block from Tuesday, then it rallied away. I'm gonna grab my fib from the low to the high, right? From the low to the high. Let me just try to make that perfect. So you can see where price traded back to. It came back to our 62% retracement level, which is our premium. Price was in premium range. So this would have been ideal entry to the upside. And you can see 3:15, just 15 minutes away from New York session, price dipped in and traded above. If you break down this structure, right, you break down this structure to a 5-minute. Unfortunately, I don't have a 5-minute time frame here because I don't trade that much of a lower time frame, but let me just insert it so that we can do a practice on it. Let me just insert the 5-minute. So I've inserted the 5-minute, right? So my entry is here. See, this is where the price action that would have gave me an entry to the upside. So remember, the timing is impeccable. You have to know what you're doing. You just don't enter. Look what happened during the Asian session where they dropped down to the downside. How many people were selling? They're thinking that euro is now going to the downside, since most people are thinking that it's oversold and all that, which is not correct. From an institutional point of view, that is not right. So now I drop down to a 5-minute time frame. You can see we had a drop into our main threshold of the bullish order block, where we anticipate to look for long positions. Then price rallied away. It forms a lower low and a higher high, right? You place your fibs, and during New York session, price massively drop into this 62% retracement, right? This would have been your entry to the upside, and the rest is history. And if you remember correctly, in the group last night during FOMC, I mentioned that euro is going to the moon, as in $20 is a long-term target or medium-term target, because already we have reached $18.50, if I'm not mistaken. Yeah, $18.43. That's probably the high of today, and that's like 100 pips, guys. From New York open up to now, we are heading towards the close, just under an hour and a half to market close. We have had 100 pips on offer. So yeah, the guys in the group, mainly Eddie, Tendai, Sean and Taku, you guys did very well in highlighting your analysis, though you need to further drop down to lower time frames, at least to a 15-minute time frame, for you to perfect your entry point, because what it does is it reduces your risk. Because if you open a trade here, right, if you are to enter here, once you have seen that price is already traded to the downside, that means you are only risking like I'm just gonna say 15 pips. That's plus the spread, right? Of course there's 11 pips now, so plus the spread, you're looking at about 15-16 pips stop loss on that setup to get what? Close to, right now it's close to almost like 100 pips. That's more than 1:4 ratio. You don't you're not gonna get those setups anywhere else other than reading your price action, what the institutions are doing. You see, what we've just done here is hop on the same train as the institutional traders, right? It's the big traders, because most retail traders here, they're thinking now this thing is gonna come to the downside, it's gonna shoot and trade lower. No, it's not. There's still work to be done up here around $20. If you go to a monthly chart, you can see the momentum to the upside. Monthly strength is bullish, so you don't need to go against that. And if you look at the fundamental side and all that, everything is pointing to a stronger euro and a weaker dollar. So I hope you guys have understood exactly what I wanted you guys to do in the assignment, and we'll keep monitoring that 1732 price point. it's gonna be quite interesting. If we do close below that, then yeah, we could see weakness coming in back to these old highs on EURUSD. So yeah, I wish you guys good luck and happy trading, guys. Thank you.